All right, folks, welcome to the goldadvisor.com podcast. Today I'm joined by Marco Roque, President and CEO of Cassiar Gold. Marco is a seasoned investor, entrepreneur with a career that spanned private banking, commodities, and mineral exploration. He's helped build and lead companies from silver to copper, and now he's steering Cassier's growth in gold. Marco, thanks for being here.
Thanks for having me, Jeff. It's a pleasure to be here.
Things are good?
All good? And with you?
Ah, I could complain, but no one would listen.
Me too.
So, for those of us who are just joining into Cassier's story, what is the Cassier story that makes this project in northern BC different from, all other gold stories out there?
There's several things that set Cassiar Gold apart. So we're located in Western Canada, in northern British Columbia, so a pretty safe jurisdiction. And that has already mine permits in place because we have 5 past producing mines and full community support. So that's one of the key aspects. The other aspect is the team. So we're led by a team of executives that has a track record of discovering, building, operating, and selling mines, not only in British Columbia, but really across Canada and the world. We have now quite a substantial resource already. We had an updated mineral resource estimate a couple of months ago. So we now have 1.93 million ounces inferred at 0.95 grams per ton gold, with an additional 410,000 ounces indicated at 1.43 grams per ton. And the deposit is open laterally. It starts at surface. It's open at depth. So there's a lot of room to grow. So this is just a stepping stone in our path to uncover what we believe to be a massive district. In addition to that, because we're past producing district, which is pretty big, by the way, it's 490 square kilometers, and the resource only occupies 1 square kilometer. We also have great access. We have paved road access to the project, which is year-round, accessible year-round, operatable year-round. The deposit and the project are paved road accessible. We have a fully unpermitted mill. We have power and water access. We have portals, underground workings, tailing facility, access roads in addition to the paved roads. And the real kicker in all of this really is the valuation. Right now, our market cap is just under 30 million. We have 30 million Canadian. We have 1.7 in cash and deposits. So it's when you think on a resource, on enterprise value or market cap per ounce on the ground, it's one of the most undervalued. And it comes with all the benefits that I just mentioned in a massive exploration upside. So that's how I sum it up, the opportunity at Cassiar Gold.
Lots of gold in the ground. Can you, as you were saying it, because you covered a lot there, can you just go through the numbers again? 1.93 million inferred,
Yeah.
and what
So
else?
so the resource is 1.93 million ounces inferred at 0.95 grams per ton, with an additional 410,000 ounces indicated at 1.43 grams per ton. And by the way, this is using a cutoff grade of 0.4 grams per ton, which is relatively high or relatively conservative for the industry. It's using a gold price assumption of 2,400 US gold per ounce. And the footprint of the deposit is 1 square kilometer. 91% of the ounces I just mentioned are within 150 meters from surface. Overburden is on average 10 meters. So this is really outcropping at surface. But more importantly, the whole deposit is open laterally and open at depth, just around the known Taurus deposit, but also with a lot of outlying or satellite targets that we believe to have similar potential to the Taurus deposits. And by the way, there's also 35,000 ounces of historical production from this part of the property as well. One of the 5 past producing mines was in this Taurus area, so this gives us a lot of metallurgical comfort as well.
So insanely low valuation, insanely high amounts of gold. That's the real takeaway for those of us out there who maybe are, A lot of the youngsters are asking me about gold too, and it's kind of like I try to tell them, it's a bit of a journey to get yourself familiar, but really want to look at strong assays and strong numbers and affordable prices in terms of share values. And that's the takeaway on that one. You mentioned Taurus. You've got high grade in the South Cassiar zones. You've got two different types of deposits, or not different types, but two deposits that are separate. How do you manage between the two without, siphoning off too much funds, too much um, human resource hours? Like, how do you keep it all straight?
Yeah, that's a great question. So, I mean, like the whole thing is part of the same district. So we have the Cassiar North project area, which is comprised mostly of targets similar to the Taurus deposit. So open pitable, disseminated at surface, and you see basically the grades there are ranging from 0.5 gram to 2 grams, typically starting at surface, typically outcropping. In the south, at Cassiar South, which it's all part of the same land package. And basically we have a 15-kilometer trend that goes over the two project areas that are contiguous and continuous. We have a slightly different style of mineralization. So these are more discrete veins. They are on average 3 meters wide. The grades are between 10 and 20 grams per ton. There we have four of the 5 past producing mines. So we have 4 vein systems. I mentioned the grades, and we've extended all of those vein systems in the last few years with some drilling. We've drilled 18,000 meters in the south, and basically extended along strike and down dip these vein systems, and they remain open. So we've historically, and over the last 5 years since we took over the project, we've allocated almost 25% to the high grade veins in the south, and 75% to the Taurus deposit and the other bulk tonnage targets in the north. And we see both as very exciting. I think they both have different development or path to production optionalities. Having said that, I think it's quite important to mention that looking at the drilling and the success we have, in just the style of mineralization, we add more ounces when we drill on a bulk tonnage in the north. For every meter drill, we add more ounces. And that's just because of the nature of mineralization, because when we're drilling the discrete high-grade veins that you see in the south, your target horizon is 3 meters wide. So you got to quote unquote spend a lot of meters to get to your targets, and still you might miss it for a few meters, or sometimes the veins they pinch and swell, or you have a bit of a negative effect in terms of the grade within the veins themselves. Sometimes you can hit sections that are 2, 3, 4 grams, or sometimes could be 40, 50, 60 grams per ton, even over 100 grams per ton. So these these are the nature of these two styles, and we feel and we know that we add more ounces when we drill the bulk tonnage, and that's why we've been focusing more on the bulk tonnage. And also, that's, I think, the most efficient path in terms of capital allocation to come up with a project that can be mined, and that the majors or the mid-tiers are really interested in. Because these high-grade veins, you can look at scenarios of producing 40, 50, 60, 70,000 ounces a year with the infrastructure that we have, as opposed on the bulk tonnage. We're looking at a much bigger prize. We have, I mentioned a few times, we have an objective of defining 5 million ounces. So our goal is to try to define a mineable deposit that can be producing 300, 400, 500,000 ounces a year, and that's really what the big producers are really looking for.
Yeah, so you want to get down there, prove out that you have this much gold to pull out of the ground, and then maybe catch the eyes of some of the big boys.
Yeah, and our hit ratio drilling is demonstrating that. We've been hitting pretty consistently, and we've been growing the Taurus deposit quite consistently, and And we're also defining new areas of similar style of mineralization, which really gives us, a really good platform and targets that, get us on that path as well.
You mentioned paved roads, electrical, water. Why does that sort of infrastructure matter so much, especially to a smaller gold miner in this business?
Well, you really can't emphasize enough the value of infrastructure and access. Discoveries are becoming a more and more difficult, more and more rare. And in many cases, the new deposits are being found really in the middle of nowhere. So, developing a mine is, it requires a lot of capital and, carries some risks. And if you need to add on top of that, building roads, building or bringing in power lines, or even, mill or things like that, it's adds even more, even raises even more the barrier for development. So that's one of the key benefits of having paved roads is that's already in place, and or power, or tailings facilities, or a mill. So it really lowers the barrier for development,
Hmm.
i.e., it reduces the capex. But in addition to that, it also allows us to operate quite efficiently as of today, because you don't need helicopters, you don't need to kind of quote unquote bend over backwards to work. So that also keeps the cost per drill meter quite low as well.
Yeah, cost savings, maximum efficiency. Everything's kind of right there, ready to plug and play. Now you've got a lot of gold. It's near surface, relatively speaking, bulk tonnage, and was I'm blanking on her title now, VP geologist, head of geology, Jill Maxwell. She mentioned that the area is a geologist playground. Can you kind of highlight some of those reasons why that is?
Well, yes, I can. It's a tagline that really caught up, and it's truly like a geologist playground. I mean, first and foremost, we control an entire district. A lot of people or a lot of companies talk about district scale. We truly have a district scale land package. Just our Cassiar Gold project is 59,000 hectares, or 590 square kilometers. So it's pretty big. It's contiguous, roughly 27 by 25 kilometers. So it's large. And as we mentioned before, it's bisected by Provincial Highway 37, which is maintained and operable, year round. But also in addition to that, 160 kilometers of access roads. So we have a big district that's easy to access to get to a lot of our targets. And in addition to that, we have pretty exciting geology. We know of so far a 15-kilometer trend north-south that actually just goes behind me. We're actually just looking at the heart of it. And within that, we have 5 past producing mines, 17 portals, 25 kilometers of underground workings, gold showings in the resource, in drilling, in outcrop in very large areas. And also, if you can see the picture behind me, we have a pretty ideal topography as well. So we don't have any glaciers coming through. We don't have heavy snowfall. So we have this valley that you see behind me in this picture. It's roughly 50, 60 square kilometers. And the Taurus deposit just occupies a little 1 square kilometer area right there, and the deposit is open. And the whole 15-kilometer north-south is just peppered with gold showings at surface and in drilling. So this is indicating that we have potentially a really massive system here. But of course, it also takes some time to translate that into resource. Although I think we've been doing a pretty good job with the resources that we have, and expanding mineralization and growing our resource inventory, and also defining several exciting targets. With gold outcropping, or expanding the Taurus deposit. Targets like New Coast, where we see a lot of similarities to Taurus, or Snow Creek, or Wings Canyon that now has a small pit constrained part of the resource as well. Intercepts at the main mine or further south on the high grade veins as well. And this is with kind of very limited work that we've done. Pretty much almost everywhere we did some work, we were finding outcrop, we're finding geophysical anomalies, we're hitting gold in drilling, this is all indicating a much larger system. So it's really a geologist's playground because there's so many targets. The system is so big, and really the majority of it hasn't even saw boots on the ground. And just the targets that saw some boots on the ground are indicating a much larger system. So we're also very excited about the potential of going to continue to uncover the riches that we have in this district.
That's one thing, as I'm reading the assays and I'm reading through your press releases and seeing essentially what you're saying now is you can't swing a dead cat without finding gold. Condolences to the cat. And it always makes me wonder. I'm sure you've read my write-ups and said I just don't understand how the market and retail and institutional investors haven't yet picked up to this stock yet. It's still trading at incredibly low valuations, despite you're sitting on the fact, or despite the fact that you're sitting on a literal endless swath of land filled with gold. I was going to say a literal gold mine, but that's a little too on the nose. Which leads me to my next question was when you're going through your drilling decisions in 2024, at that time, this is before you've raised your funds and you have to be very shoestring and very logical about where you put those drills in order to save money. How did you decide where to drill, what to look for, and still come up with some pretty incredible numbers?
Well, it's a combination of several factors, but it all starts with the geoscience and the geology, right? So we have a multitude of targets with different levels of work and layers of evidence supporting each of these targets. We can start at the most advanced one. The obvious one is a Taurus deposit, where we have mineralization starting at surface, and we had basically a resource already defined there. Mm-hmm. And the deposit basically was and still is open laterally and open at depth. So an easy decision there is allocating some meters to continue to step out and see if eventually we can find the edges of the deposit, which we haven't yet. And I hope that continues for some time.
That is good news.
Yeah,
just wherever you drill, you're finding.
Exactly, but you also have to advance the other targets and kind of better understand the whole system geology as well. So we have other targets that we've done some work. The new coast target is 2.5 kilometers south of Taurus. Actually, I think Taurus is kind of right. Just trying to around here. New coast is kind of. I'm trying to point my finger. All right, it's going in the opposite direction. New coast is more or less around here.
Yeah.
There we had, there was basically some historical drilling. The old timers were looking for high grade quartz veins that they can mine underground. So we had some information from the old timers. And we also did a very substantial, mapping and sampling exercise, kind of looking for outcrop. We know at Taurus, the overburden is on average 10 meters. Every once in a while, we have bedrock outcropping. And what we consistently saw, not only at New Coast, but at several targets around Taurus, similar style of veining, mineralization, and alteration as we see at Taurus. And that was, very encouraging. So that was indicating that we potentially have a big system at New Coast. Just a New Coast corridor, we identify that type of mineralization on a 4 kilometer by 800 meter wide corridor. So that's over 3 times the footprint of Taurus. So we followed up with some drilling there. In the last couple of years, we put 9 drill holes there. They all came back mineralized. And the highlight there was 141 meters at 0.9 grams per ton. So similar widths and similar grades that we see at Taurus. So that's giving us, some confidence or, some suggestion that we can have, maybe another Taurus there. And potentially because we see still more similar styles of mineralization, it might even be linked with Taurus, in which case the system could be really, really massive. But it's early days. We need to get the truth machine out there and see if it's that really the case, and that's actually something we're doing right now as well. So mapping and sampling is one, geophysics is one. The IP, had highlighted several areas. We did IP now for, over 16 square kilometers centered around Taurus. We have, a lot of the ground has anomalies, geophysical anomalies, and what actually that also correlates with the mapping and sampling as well. So the more layers of evidence, being geophysics, map, or outcrop. We also done soil grid surveys to the north and to the south of Taurus, and we're also seeing anomalies there. So all of these evidence help us prioritize the drill targets. We always want to put a certain percentage of the drill meters to continue to grow Taurus, because kind of is almost like an easy win there, but also allocating to other targets to continue to try to unlock the districts, find more satellite targets that could be satellite deposits or pits in their own rights, or eventually we might even connect them as well. So this is the kind of strategy we've been focusing. Kind of, we call it a bit of a barbell strategy. Kind of low risk, easy wins, higher risk, kind of swinging a little bit more for the fences, and also that allow us to understand, the district geology as well. And what we see as well is actually a lot of a lot of similarities between different parts of the property, both within the bulk tonnage areas like New Coast or Taurus or Snow Creek. We see some similarities in the orientation of the veins, or in the types of alteration or mineralization or veining, but also in the south. Even in the south, the orientation of the discrete veins has similar orientation to the north. So learnings from one part of the property also allow us to apply some of these learnings to different parts of the property, because there are so many similarities. This is part of the same district, and it really helps compound the geological knowledge we have on the district.
Yeah, you were talking earlier about the fact that your next hypothesis is to prove out that the veins are indeed, part of the same system. And I guess it would be logical to conclude that pretty much wherever you're looking, you're finding. So the likelihood is that they are, and even if they're not, your drill results have shown there's gold. So you've recently come up with a $6 million fundraise. I know a big chunk of that was purchased from your own internal team, which sends an amazing message to investors of whether they're retail or institutional. Was there anything else about that raise that intrigued you in terms of who was buying?
Well, I mean, we had a very successful raise, so we've launched $5 million, and we got oversubscribed and raised $6 million. Just in terms of the breakdown, we've raised $5 million at 36 cents flow through. So that has, all of that has to go into the ground. And we also raised roughly $1 million hard at 25 cents, and both components come with a 50-cent warrant. And in terms of kind of the breakdown of investors, roughly around 10% was taken by insiders. The valuation is very attractive, so it's really a no-brainer for me. It's a no-brainer. I put another $200,000 in this private placement. Our chairman Steve Levin put also another $200,000. We had other insiders coming in as well, and And by the way, myself and Steve Ledon are also, buying right now in the open market because the stock is really, at these levels, a no-brainer. In addition to the other, in relation to other participants, we had, roughly almost a third institutional funds, some new, some repeating, and then the balance, which is, roughly 60%, is kind of high net worth in retail. It's, I think, in terms of the market, kind of in general, I think we're still, I think we were off the bottoms in the sector. I don't think, I mean, the big producers there have this beautiful, amazing cash flow yields. They're printing cash, and they have, rapidly improving balance sheets, repaying shareholders, dividends, share buybacks, paying down debt. But most of these big producers are also have declining resource and reserves. You see some M&A in the sector, but I think we're just in the early innings. And I think that's kind of where you see so much disparity within the sector, even within the exploration stage. There's a lot of disparity between companies. Some companies, quite nicely valued, others not so much. So there's a lot of opportunity in the space. One of my favorite metrics for companies that advanced exploration or development companies is really looking at the number of ounces, looking at the infrastructure, permits, land package, and we're one of the cheapest ounces out there with all the other benefits that include what I just mentioned: the permits, the infrastructure, the team, and the exploration upside that we do really have a lot as well.
Yeah, the infrastructure is all there. The ounces are amazing. And to your point previously about, the big producers or the big players are printing money. I do quarterly sheets for Jeff when he goes and does his big chats that just kind of shows cash flow from Q1 this year, Q1 last year versus the year before. And the big players are all going, from $10 million net positive to 100, 150 million net positive per quarter. So the time is nigh for, they got big purses paying off their debts, and now they got to go put more minerals back into their bucket, so to speak. So obviously the Cassiar stories should be a compelling one if you're in their shoes. Um, bring it to a personal level, you've worked across multiple different industries in your background, different mining companies as well, copper, silver, now gold. And as you're talking, I can kind of hear the answer to this question already about what made Cassiar special, or kind of a no-brainer for you to jump in as the CEO. But maybe there's something else there you wanted to add that sort of compelled you to push this story into your own CV.
Yeah, well, no, that's a great question. 5 years ago when I got here, we're looking at a company that had, yes, it had mine permits in the infrastructure already in place, but it had a very small resource. We were able, after optioning the project, put out an initial resource of around 1 million ounces. So it was a really good start. And really at the time, kind of the thesis is like, we see the potential for 3 to 5 million ounces here.
Yeah.
And I thought, wow, back in the day, like, things are changing a little bit, but back in the day, 1 million ounces was kind of like the magic number from which you have the enough scale to build pretty sizable project or mine and deposit. Things are moving a little bit higher these days with inflation and whatnot. So people, or most of the mid-tiers and majors are looking at least for 2 million ounces or a production profile of 200,000 ounces a year. But the truth is, the asset has been living up to the expectation. I wasn't 100% sure 5 years ago that you can really get to 5 million ounces. But as of today, we're almost at 3. And to be honest, I think there's a lot more than 5 million ounces. At least if we take, all the work that we've done in the past 5 years, pretty much almost everywhere we worked, doing, soil grid surveys or geophysics or mapping and sampling or drilling. We've pretty much, found either gold or anomalies almost everywhere we worked, and I guess it's really moving the bar higher, and yeah, and also came to understand the project a lot better, all the advantages that we have with the infrastructure, the state of the mill, which is in good condition. It was a bit of the question mark in the beginning. So I mean, like I thought it was a pretty exciting project with a lot of potential 5 years ago. Now I think it's an amazing project, that's already very substantial as it is. It has the bulk tonnage, has a high grade, it has a lot of optionality in terms of development, and I think the resource endowment that we will able to eventually define here one day is actually much higher than in my mind, than I originally anticipated. So it's also been a lot of work, but I think it's been really worthwhile.
Yeah, I can imagine the amount of work and the amount of time that is spent just sussing through such a huge land package and where to put the drills. And every time you drill, it's not like you're coming up empty on any of them thinking, okay, that's a nothing spot. It's just another target that you found. So it's it's kind of a crapshoot, but the upshot is that wherever you drill, there's gold there. So you got to just focus in on the heaviest deposits if you can actually narrow it down. It's sort of a an embarrassment of riches, if you will.
Yeah, I
Let's
like that cash phrase.
yeah.
Embarrassment
Ge
of riches. I'll take
the
that.
the geologist playground, also embarrassment of riches. If you and I are talking, or I should say not if, but when you and I talk, throughout the end of 2025 and into 2026, what are some of the success stories and some of the milestones that you're going to be hoping to tell me about in those days?
Well, I guess for the near future, we're currently drilling. So we've originally planned a 5,000 meter program. We've expanded that to 7,000 meters. So the rigs are turning. We've been kind of connecting, trying to expand and connect the different pits at Taurus. We're also drilling at New Coast, which is a target that we don't have a resource or a mineral resource inventory yet, and that we believe holds a lot of potential there. And we should be able to start releasing drill results for that mid to late September. So in about a month or less than. And we probably will be releasing results probably until January. Given I think labs are pretty busy. There was a flurry of capital raise in the exploration space in the last few months. So I think labs are on the receiving end of all of that efforts and work.
Yeah.
And
Yeah.
on the back of that, we're also we're basically pursuing metallurgical studies as well. Although we have historical metallurgical records from both the bulk tonnage as well as the high grade, but we need that metallurgical studies. One to really have proper studies done, and look at what would be the most optimal methods and lower costs as well. But also to inform kind of a first pass PEA that we want to do that can really translate all the advantages that I mentioned with the infrastructure and the access and the mine permits and the power, etc., into dollars. We know this is going to be probably only kind of a first study because we have so many targets. Our deposit remains open, but I think it will give. We already have a very substantial number of ounces. The in situ value of the ounces that we have right now, I think it's over 12 billion Canadian dollars. And if history is any guide, we will keep on finding more. And I think that should translate in some positive numbers, and that's something we're looking to release on the first half of 2026 as well.
That's great. Well, I look forward to hearing or reading those, and of course, hearing from you as they come out. But that sort of segues into my next question, my last question. But you've kind of answered some of it already. Is there anything you want to add that you want to tell every investor out there or everybody who's watching this kind of sitting on the edge of their seat? Do I buy it? Don't I buy it? I mean, you mentioned you bought more on the open market currently after your 200K. I've been buying a little bit more as we go because the more I read the pressers, the more I just can't understand why this isn't going gangbusters anytime soon. So what is the one takeaway or the one thing you would like everybody out there to know?
Well, I would just ask people to have a look and really spend more than 5 minutes looking at things. I think there's a lot of information asymmetry in this, in markets in general, but in specifically in the junior mining space, you have some companies that are, pretty nicely valued, others not so much. I think we are quite undervalued as it is. I think people should really take note of what we have. And I mean, if you don't want to, follow my advice, just, you don't have to believe what I'm saying or follow what I say, but, look at what I do or what insiders are doing. I think that's actually a very important metric, especially for smaller companies. Kind of tying back to the insider buying that you were mentioning. I mean, I'm buying on the open market and I'm putting into private placement because I see it as really a no-brainer at these valuations. So I don't, I think this is an opportunity. The project is bigger, more advanced, more de-risked, and I can buy it at, even lower valuation. So I really think it's a no-brainer. $10 per ounce on the ground, and you add on top of that the infrastructure, the permits, the team, the exploration potential. It's very compelling. So I would just invite everyone to have a deeper look at what we have, do a little bit more digging, do some research, and feel free to reach out. I'm available to talk with any investors. I think we have something quite unique, quite valuable. And I'm here to answer any questions, and I think it's a very unique opportunity, and I'm looking forward to connecting with everyone that might want to know more or has any questions about what we have and what we have so far and what are our plans as well.
Bigger, more advanced, de-risked, undervalued, a no-brainer. That's the quote of the day. And with
Sounds
that,
good.
Marco, I thank you so much for your time. It's been great. This has been fun. And to your point, you're very quick on email. So if investors do have questions, preferably large institutional investors, Marco's very quick to chat and respond. But to your point already, the numbers seem obvious, to quote your phrase, a no-brainer. So it's only a matter of time, I'm hoping, before the real market, the big market, picks up and says, hey, this is actually a gem waiting to be had.
That's right.
Right on. Well, thanks so much, and we'll be in touch as always, and have a good end of your week.
Thanks, John.